Hello again, traders, and welcome out. This is Ankit from Maverick Currencies, and this is a quick preview for the US CPI report that's due tomorrow on Tuesday, March the 14th at 8:30 a.m. Eastern Standard Time. And oh boy, what a critical time to have the CPI report. We are in the middle of this regional banking crisis, and we are seeing markets collapsing and going back and forth all over the place, and yields are plunging and the dollar is moving lower. And here we are waiting for the US CPI report tomorrow. So as always, we'll be taking a look at both the best case scenario and the worst case scenario and see where we need to set up our trades for. So as we take a look at the expectation, again, the expectation for tomorrow is for a weaker CPI report. That again, expectation is down across the board. But also we got to keep in mind is that we need to be prepared for any sort of surprises out there. You know, we are seeing just like we saw with Switzerland last week. You know, we saw an uptick in the inflation rate, and we saw a big jump in the Swiss franc. Can we see the same for the dollar, or is this a time to pivot on the dollar and the yields, because we have seen a big plunge in both of those currencies and the bond market? So let's take a look at the velocity score, and we'll dive deep into the charts here. Looking into tomorrow, again, dollar is going in with a negative momentum. And again, there's a reason for that, because with this collapse, there's a big expectation right now that the Fed will not be raising rates. The expectation has dropped significantly in the last 24 hours. So is the market getting ahead of itself? You know, just a week ago, we had the Fed Chair Powell, and he was very hawkish in his comments. And here we are just a few days later talking about rate cuts. So is this too extreme sort of a swing from one side to the other? Or is there an opportunity in between? So that's exactly what we need to figure out. And dollar is going on a weaker side, but we'll be taking a look at both the best case scenario for the dollar and the worst case scenario for the dollar. Outside of that, you know, we had the cryptos were on fire, but I mean, within the currency market, we have the British pound that's showing relative strength. So again, this is the time to take a look at pound dollar. We also need to take a look at currencies pairs like dollar yen and Aussie dollar, because again, they were trending very nicely just till 3 days ago, where we saw this big reversal. And we also need to pay attention to other pairings like the Eurodollar. So as always, we talk about different ways of trading these news. And as always, you have to decide beforehand if you will be entering before the news, on the news, or in the second stage entry. And this all comes down to your biases. You know, if I have a stronger bias, I can go on before the news. And sometimes if you want to be reactionary, we can be on the news. And sometimes the best trade comes on the second stage, where we get that confirmation. We get the initial volatility out of the way and look for the true move. Every strategy comes with its pros and cons. So remember, the best way to tackle these is that being consistent in your decision making. Slippage is the kind of an enemy here for anybody that's trying to trade on the news or trying to put the trades beforehand as a buy stop order or even a sell stop order. So make sure that you're trying to avoid that by using a buy stop limit or a sell stop limit instead of just a stop order. We also can expect some whipsaws. Again, volatility can go both ways, and a lot of times when we see this kind of price action, this is not conducive for anybody that's looking for a direction. So this is, again, one of the reasons where sometimes you doing a second stage entry comes in handy. So as you go to tomorrow, you have to kind of look at your strategy book and see which one works the best. So let's do a quick trade setup analysis and take a look at the charts here. So as we go into this Asian markets here, let's take a look at what the markets are doing. So, I mean, we are seeing the markets, the future markets are up a little bit. We're seeing the dollar is actually up a little bit as well. So we're seeing a nice little recovery in the US dollar in this second half of the US day today. So as we go into tomorrow, if you look at the daily chart, again, this is where it gets a little bit mixed picture here, because if you look at the daily chart, you know, we still are liking that uptrend here. We broke this uptrend just right here. So is this a point to short, or is it just a discount to buy into? This is where we have to take a look at the bond yields, and we should take a look at the 2-year yields. I mean, that's where we've seen that biggest drop. I mean, in the last 3 days, we dropped about 21%, as you can see where we were sitting before. So the question is this a buying opportunity? in the dollar and in the yields, or is this where we need to pivot? I think it's too early to call and say what's going to happen because we still have the inflation problem. The Fed, it's only going to make this difficult for the Fed because let's say, hypothetically, we get a strong report tomorrow from the CPI number. Now, here we are, getting this expectation turned upside down. Again, that could potentially happen. So this is where I think tomorrow carry a little bit more risk because either we see a continuation for what we saw today, where the expectation continued to fall. I mean, if you take a look at the expectation here, just a day ago we were at 40.2%. We are now sitting at 0%. So we were actually calling for a 50-point basis hike. So that has diminished significantly in the last day or so. And we take a look at the expectation now for the 25 basis points. I mean, that's sitting at 73. Again, this is where the most hawkishness was when traders were calling for a 50 basis point rate hike. So could this inflation report tomorrow can bring that bet back on the table? And if it can, that's where we will see a big move. So if we see a worse report, then we can see a sort of a continuation of what we are seeing here. So this is where we need that catalyst in tomorrow, the jobs report, and this is where tomorrow's inflation report will provide that catalyst. So let's talk about the pairs that I'm watching for this report. Dollar yen. If you take a look at dollar yen, we were in this downtrend for the longest time, and then we saw a nice little recovery here. And we have now gone from 138 or 137 down to 133. That's a 400 pip drop here. So the question is this an opportunity to buy or is it an opportunity to sell? If we just look at the chart here, it seems like a nice little pullback. But at the same time, if we don't get the supported data from tomorrow, then this can easily fall back further. But based on the negative correlation, I wouldn't be surprised if the dollar yen make a big recovery if we get a better than expected inflation data. I mean, right now we are seeing in the Asian markets, the dollar is actually doing much better and it's trying to reverse some of the moves. So every time we see these big moves that happen in a very short period of time, we could expect to see some pullbacks in between. So dollar yen comes on the top of my list as a buy if the dollar is going to be the best currency. Now, the next one is the Aussie dollar. I really like Aussie dollar because take a look at this chart. We actually broke a very strong support from November and December. And here we are, rallied right into it and now selling off once again. If you take a look at the 4-hour chart, we just came right back into the zone here. Is it the point to sell? I think that's where this would be another currency pair that I really like going into tomorrow. So again, these will come in as for the best case scenario for the dollar. What about the worst case scenario? I mean, if you take a look at the Aussie compared to the Kiwi, I mean, we are definitely noticing Kiwi is doing much better. So if I take a look at the chart for Kiwi dollar, and again, this is where you can see that this chart does not look that bearish. I mean, on a daily chart, we got a nice little bounce here. On an hourly chart, it just seems like a pullback here. And again, this pullback can be bought out if the dollar actually get weakened. So this will be another trade for me tomorrow. I'll be looking to clear this area before I get long. As you can see, there's quite a distance to go. And, usually I like to start with the either based on the volatility, we can start with a smaller position size and leg in it moves our way, or just, wait for that opportunity to break before we can jump in. But there's a big support or resistance right here about 62.53 area. Now, we can also take a look at the pound dollar. You can see that a lot of these really rallied up above these moving averages. So at this point, this just looks like a pullback. So you can see we can make both case scenario. We can talk about this being a pullback, or some other pairs. We can look at this as a rallied short. So I think tomorrow overnight we'll probably see sideways price action, maybe some recovery in the dollar. But again, all eyes will be on the CPI data tomorrow. And again, like I said, if I'm looking for a big move, either I would love to see a rally overnight, and if the data is weak, then we can see a sell-off off of that. So I don't really like to short dollar here. I think dollar is in for a bounce. But if we get a better data, I think this thing can turn pretty aggressively the other way around. So we need to be prepared for both case scenarios. And like I said, these are the pairings. Two pairs for the best case scenario and 2 pairs for the worst case scenario. So we'll be watching it live and making trades accordingly. Good luck. Take care.